Hello everyone, welcome back to my channel. So in this video I am going to explain about the FIFO method, that is first in first out method, one of the inventory valuation method. Here I am going to explain about the meaning of FIFO method, that is first in first out method, and also I am going to explain the problem related to the FIFO method. Let us see the meaning of first in first out method. So means the concept says that whatever the materials we are receiving first, those materials are issued for the first for the production process. Means the old stock has to be issued first for the production process, and once the first received stock has been completed, and then we have to go for issuing the next lot of materials for the production process. Until the old stock has been exhausted, we cannot go for issuing the new stock of materials according to this method. So as a result, the FIFO method, we will get the closing stock will be at the latest purchase price. Means the closing stock which comes from the FIFO method, so we will be having at the latest purchase price. Now we will see a problem related to the FIFO method. Here is the problem for the FIFO method. So here in this problem, they are saying that in a factory, stores are issued and accounted for on FIFO method. Means in the factory they will go for issuing the goods or materials according to FIFO method. If the stock of particular material on 1st January 1992 is 1000 units at rupees 5 per unit, means on 1st January of 1992 the units are with the company is 1000 and the price of per unit is 5 rupees, and the particulars of purchases and issues during the month of January 1992 are as follows. So this is the first month, that is on the opening balance, that is on 1st January 1992 they are having this much units at this price, so this will be considered as the opening balance. Apart from this, they are having certain purchases as well as the issues in this particular month of January, so they have given the information purchases as well as the issues. From this information you should go for preparing a statement showing how the value of issues should be arrived. Means what is the value you will consider for the issue of the materials. So here they are clearly saying that FIFO method. So you have to go for preparing the stores ledger or statement for showing the value of issues according to FIFO method. So let us see how to prepare the statement. So this is how we'll go for preparing the stores ledger. So write it as a stores ledger. Below that, what is the method you are following for the maintaining the stores ledger. Here in the problem they have given FIFO method, so we are writing it as the FIFO method, and all these details related to the material to be filled, that is name of the material, so specification of the material, code given for the particular material, units of measurement, bill number, location of the materials, what is the folio number, maximum level of units, minimum level of units, and reordering level of the units. So all these details should be filled, but in the problem they have not given any information related to these details, so we'll kept it as the blank and we'll go for preparing the statement. So in original scenario in the business organizations, the stores manager, when they are preparing the stores ledger, they will go for filling all these details. So let us see how to prepare the statement. So here is the Proforma for the preparation of the stores ledger. So we will go for recording the date, and we will be having receipts and issues. So here receipts indicates for the purchases whatever you are making. Means when you are purchasing certain types of goods, you are receiving goods from the supplier, so that will be recorded under the receipts column. Issues, whatever the materials you are issuing for the production process from the stores, so all those issues will be recorded under the issues column. And balance, once the receiving or once the issuing has been done, what is the balance of units and balance of amount you are having, that should be recorded under the balance column. So in case of receipts, issues as well as balance, we'll go for making the entries as the quantity, rate, amount. Quantity, number of units received, what is the rate per unit, and total amount. Quantity into rate, you will get the total amount. Issues also in the same way, balance is also on the same way. So now according to this problem, so they are saying that on January 1, 1992, that is 1/1/1992, they are having the balance of 1000 units. So here they are not saying that it is a purchases or issues. So directly they are saying that on 1st January 92 they are having 1000 units of materials. So directly we will write it on the balance. So that is we will consider as the opening balance quantity, and they are saying that rupees 5 per unit. So now you get the total amount. So the quantity should be multiplied with the rate, you will get the total amount, that is rupees 5000. So that is the first information. So once the opening balance has been completed, next you will go for considering the purchases and issues. So on Jan 3rd, that is on 3/1/92, they are having the purchases. So purchases indicates for receipts, we are receiving the goods. So we will go for writing another receipts column. So they have purchased 200 units at a price of rupees 5.50. So on the total amount will become 1100. So that is the amount. So now, so here previous balance we are having 1000, and we are now newly we have purchased 200 units. So now, so for after each and every receipts and each and every issues, you should go for writing the balance. So here for writing balance, if the price, that is rate per unit, for both the cases is same, then you can write the balances combinedly. So here in this problem, here the rate is 5 rupees and here the rate is 5.50. So two different rates. So we have to write this separately balance. So previous balance as usual 1000, rupees 5 and rupees 5000. And newly purchased balance 200 units, rupees 5.50, and the amount will be 1100. So this is how we will go for making the writing the balance amount. And on the next transaction is on Jan 9th, that is 9/1/92, they are making the issues. So we will go for writing another issue column. They are issuing 1000 units. So quantity is 1000 units. So now here we are preparing the stores ledger according to the FIFO method. That means whatever the materials first come, that material should be issued. So here we have to issue 1000 materials. So we will consider the first material, that is opening balance materials, and the rate we will take it is the rupees 5 and amount is rupees 5000. So we have issued 1000 units, and now these units, entire units has been completed. So the balance left is 200 units. So 200 units at rupees 5.50, amount will be 1100. So this is how we will go for making. And next transaction is on 15th January 15/1/92. So again they are having the purchases. So they have purchased of 1400 units at a price of rupees 6 per unit. So now the total amount will become rupees 8400. So now on this date we are not having any issues. So directly go for writing the balance. First write the previous balance 200, rupees 5.50, total amount is rupees 1100. So now write this newly purchased balance 1400 units, rupees 6, and the amount is rupees 8400. So this is how we'll go for writing the balance. And the next transaction on 17 Jan, that is 17/1/92, they have issued 1000 units. Now here, so we have to, on this date they are saying that the issue is 1000 units. According to this method, we have to issue the first old stock and then we have to go for the issue of new stock. Here old stock is 200 units and new stock is 1400 units. We have to issue 1000 units. So first we will issue 200 units at a price of 5.50, rupees 1100. And so, but we have to issue 1000 units. We have already issued 200. So remaining 800 units will be taken from the new issue, that is 800 with a price of rupees 6, and the amount will become 4800. So these 200 entirely we have issued, so that is closed, and out of these 1400 we have issued 800, so still we will be having a balance of 600 units at a price of rupees 6. So total amount will become 3600. And so after this transaction, next we are having the transaction on 21st January 92. So on this date they are again purchasing of 800 units at a price of rupees 6.5. So 6.5, and the total amount will become 5200. So now we have to write the balance. Previous balance as usual, 600 into rupees 6, rupees 300, and newly purchased 800 units at rupees 6.5. Total amount is rupees 5200. And the last transaction is on January 23rd 192. So there is a issue of 1000 units. So again here we are not having the 1000 units at a one, we are having 600 units and 800 units. So first unit should be issued. So 600 at rupees 6, rupees 3600, and from these 800 we have to go for taking 400 units at rupees 6.5, and the amount will be rupees 2600. And now this entire 600 we have issued here, and from these 800 we have taken 400, so the remaining balance will be 400 at a price of rupees 6.5, and the amount will be rupees 2600. So this is how we'll go for preparing the stores ledger by using the FIFO method, that is whatever the items first comes, that should be issued the first. This is the process for preparing the stores ledger according to FIFO method.